Are gambling and investing the same thing? Most people I spoke with said they wouldn't invest in stocks or mutual funds because they don't like to gamble. But investing is not the same as gambling. Gamblers who go all in may receive a reward for their risk, or they may lose and walk away empty-handed. Emotions play a role in gambling. Investing, on the other hand, is a method that has been well examined. Here are a few distinctions between investing and gambling. But first, hello and welcome to Upstep Financial, your road to financial independence. Please hit the subscribe button and smash the notification symbol for more videos like this before starting with our topic. Investing may be a thrilling experience without a doubt. Rapid success in the markets can boost your confidence and make you eager to seek the next opportunity. However, there is a thin line between investing and gambling, and you must stay on the right side of it. Investing versus gambling, which is better? We shouldn't mix the two, yet we do. Some investment decisions resemble gambling. The act of allocating funds or committing capital to an asset, such as stocks, in the hopes of creating an income or profit, is known as investing. The underlying premise of investing is the expectation of a return in income or price appreciation. In investment, risk and recovery go hand in hand. Minimal risk usually translates to low predicted profits, whereas more significant returns are frequently associated with higher risk. A risk management strategy for investments, spreading your money over various assets or different sorts of support within the same class, will likely reduce your risk of losing money. Some investors use stock charts to analyze trading trends to improve the performance of their investments. Stock market analysts use charts to try to predict where the stock will go in the future. Technical analysis is the term for the field of study that focuses on analyzing charts. The amount of commission an investor must pay a broker to buy or sell stocks on his account might impact investment returns. Staking something on a whim is what gambling is defined as. It is also known as betting or wagering, and it refers to putting money on an event with an unclear outcome and a high degree of chance. Gamblers, like investors, must carefully choose how much money they wish to put in play. Pot odds are a technique of comparing your risk capital versus your risk reward in some card games. The amount of money needed to call a bet compared to the amount currently in the pot. The player is more inclined to call the wager if the odds are favorable. Risk management is a skill that most professional gamblers have mastered. They look into the history of a player or a team, and the genetics and track record of a horse. Card players often observe the other players at the table. Skilled poker players can recall what their opponents wagered 20 hands ago. They also analyze their opponent's demeanor and betting patterns in the hopes of acquiring beneficial information. The odds are frequently stacked against gamblers. Losing an investment is usually more likely than the chances of gaining more than the investment. A gambler's chances of making a profit are also decreased if required to put up additional funds, known as points, which are held by the house regardless of whether the bettor wins or loses. Investors pay points in the same way they pay a broker commission or a trading fee. Please share this video with your friends to help them decide between investing and gambling. And before going into the point-by-point comparison, feel free to add your thoughts in the comments section below. A crucial principle in both gambling and investing is to limit risk while maximizing rewards. However, when it comes to gambling, the house always has an advantage. A mathematical advantage over the player that grows as they play longer. The stock market, on the other hand, continues to appreciate with time. This isn't to say that a gambler will never score the jackpot, and it's also not to say that a stock investor will always make money. But if you keep playing, the odds will eventually work in your favor as an investor, rather than against you as a gambler. Gambling and investing are two completely different things, although people frequently confuse them. One is designed to provide a cheap pleasure if you're lucky, while the other is designed to steadily grow your money over time and finally allow you to retire. So what are the primary distinctions between investing and gambling? Gambling is based on luck, whereas investing is based on research. Investing is a time-consuming process that necessitates extensive research, while gambling is wholly based on feelings. To invest in the correct assets, one must conduct sufficient study and understand their risk tolerance, goals, and financial status. Gambling does not necessitate a great deal of investigation. It only takes one piece of news to trigger a market reaction, and emotions rule the market. Investors frequently invest based on rumors or suggestions, like, for example, purchasing a futures contract, which may necessitate more study than buying stock. Loss mitigation. Another significant distinction between investing and gambling is that there is no way to restrict your losses. To avoid a total loss of risky cash, stock investors and traders have several options. Setting stop losses on your stock investment is a simple technique to protect yourself from taking on too much risk. Investing provides you ownership of a valuable asset, but gambling does not. Investing in mutual funds, stocks, or any other asset for that matter gives us ownership of that asset. When you put your money into gambling, you either get more money or don't get any money. At the end of a gambling transaction, there is no ownership of the asset. When it comes to investment, though, one might claim ownership of an asset. The factor of time. Another significant distinction between the two activities is the concept of time. Gambling is a one-time experience, whereas a firm investment might last for years. When it comes to gambling, once the game, race, or hand is finished, your chance to benefit from your wager is gone. You have either won or lost your money. Investing in stocks, on the other hand, can be time-consuming. Investors who purchase shares in dividend-paying corporations are paid for their risked money. As long as you hang on to their stock, companies will give you money regardless of what happens to your risk capital. Investing is a long-term strategy, whereas gambling is a short-term one. Investing is typically done over a lengthy period. For a length of time, typically more than a year in the case of equity. Investing in debt funds, short-term bonds, and money market instruments are the only exceptions to this rule. Gambling or trading takes place during trading hours, and it can last for a few weeks or months at the most. Investing entails a lower level of risk than gambling. In most cases, gambling is founded on the notion of going all in. When a person takes a risk, he or she is either rewarded or left empty-handed. There are slim odds of recovering money lost through gambling or trade. When it comes to investing, one may always swap from one fund to another or from one asset to another and recover the money lost. When it comes to gambling, if you lose everything. The money lost in trading or gambling can be retrieved by trading or gambling again, but only if more money is introduced to continue. If an investment is losing money, it can be withdrawn and reinvested elsewhere. No one ever loses all of their money. Gambling is addicting, not investing. Gambling is regarded as a severe mental illness. Some organizations recognize and address compulsive gambling as an issue. At the same time, no such problems have been identified for investment. Investing is regarded as a solid financial habit for a prosperous life. To summarize, between the two, there is a narrow line of distinction. Gambling is riskier than investing because gamblers are risk takers, while investors have slightly lower risk tolerance. Stock market betting is also possible, but it is dangerous. Investing is not the same as gambling. There is a narrow line that separates the two, despite their many similarities. Gambling is a risk taken under uncertain situations, whereas investing is a risk done under definite conditions. Gambling relies purely on luck, whereas investing requires patience, practice, and expertise. Bret Hart's famous phrase is accurate. The only thing you can count on with luck is that it will change. And that concludes our video for today. Again, this is Upstep Financial, your journey to financial independence. Remember to subscribe and use the notification button to be notified when we have a new video. We'll catch up with you in our next video.